Hello students, in present video I am going to explain about 11th problem from final accounts topic. I am taking this question from Inter first year Telangana State Telugu Academy textbook. Let us see the question first. In final accounts, first we have to prepare trading account and profit and loss account in one table and a balance sheet separately we should prepare. So, trading account, profit and loss account of Yadradri traders for the year ended 31st December 2018 is the heading. This is account. In this account, first trading account we are going to prepare, then profit and loss account. Debit side, credit side. First trading account. You know the rule. Debit side, direct expenses, direct losses. Credit side, direct incomes, direct profits. Trial balance, debit side first we'll take. We have to start with opening stock now. Yeah, opening stock is given 3,000 rupees. Debit side, with the 2 we should start. 2 opening stock, 3,000 rupees. Again from starting, cash, purchases. Purchases, we buy raw material, after that we manufacture. Means this is up to manufacturing expenditure, means direct expenditure. Trading account, debit side. 2 purchases. Before writing the amount, see credit side whether purchase returns are given or not. Purchase returns are not given. Therefore, purchases amount 10,000. Directly in outer column we can write. Carriage. Carriage means transportation. So if only carriage word is given, then the meaning is from supplier's place to our godown. To transport the goods, we incur this expenditure. So after bringing the goods, we start manufacturing. Means this is up to manufacturing expenditure, direct expenditure. Trading account, debit side. Carriage, 1,000 rupees. Factory rent. So all factory related expenses are direct expenses. Because in factory only we manufacture goods, no? So factory expenses are manufacturing related expenditure. Therefore direct expenditure, trading account, debit side. To factory rent, 1,200 rupees. No adjustment, therefore amount in outer column. Salaries and wages, not here. Machinery, discount, copyright, carriage on sales. Clearing charges. Clearing charges in 2 contests we use. So first one in banking sector. Second one in case of imports and exports in logistic field. So when raw material is imported to custom officers, we have to pay some tax, some duties, some charges. Then only they release these goods. Now these expenses are known as clearing charges. So after paying to them, we bring the goods and we start manufacturing. Means this is also up to manufacturing expenditure, direct expenditure. So trading account, debit side. 2. Clearing charges, 300 rupees. Next, bills receivable, opening stock, printing and stationery, coal and gas. In manufacturing process, we use coal and gas. So direct expenditure, trading account, debit side. 800 rupees. Debtors, drawings, furniture, office expenses, internet charges. Debit side completed. Come to trial balance, credit side. Sales. Purchases, direct expenditure, debit side. Sales, direct income, credit side. By sales. Before writing the amount, we have to see whether sales returns are given or not. Sales returns will be given on debit side. See in debit side, sales returns are not given. Therefore, sales amount 20,000 in outer column. Internet discount, overdraft capital, creditors. They don't come on credit side of trading account. Come to adjustments. Only one adjustment comes here, that is closing stock. Opening stock, debit side we wrote, no? Closing stock, credit side. Year ending stock. By closing stock, 6,500 rupees. Everything is completed. Finally, 2 side totals we should calculate. Credit side total 26,500. Debit side total 16,300. Difference 10,200. Credit side we wrote incomes. Debit side expenditure. Difference 10,200 is profit because income is more than expenditure. This profit where the total is less, that side we should write. Debit side total is less, no? Debit side, write down this profit, 10,200. And this profit is known as gross profit. To gross profit. Now two sides, highest total, 26,500. Right side also same. With this, trading account is completed. Continuation, profit and loss account. How to start? Gross profit, credit side we should bring. And we should start profit and loss account. So place will not permit me here. Therefore, I'll rub everything and again I will show you profit and loss account. Take a screenshot of trading account. Now profit and loss account we will start. First gross profit to right side. By gross profit, 10,200. Now again trial balance debit side. So indirect expenses, indirect losses debit side, indirect incomes, indirect profits credit side. Cash purchases, carriage, factory rent, salaries and wages. See, if only salaries are given, profit and loss account debit side. If only wages are given, trading account debit side. But how he is giving? Salaries and wages. Amount 2,400 rupees. What is the meaning of this? In this 2,400, wages amount is less, salaries amount is more. So for negligible wages amount, accountant doesn't want to maintain a separate account. Therefore, in salaries account only, he want to show wages expenditure also. That is why account name is salaries and wages. Suppose wages and salaries are given 2,400. Then the meaning is salaries amount is negligible, wages amount is more. Now, if these two expenses are given, then we should give priority to first expenditure. If a salary is the starting word, then salary we write in P&L account now. Therefore, salaries and wages also show in P&L account. If wages is the first word, wages we write in trading account now. Therefore, wages and salaries also we should write in trading account. Salaries and wages are given. First word is salary. Therefore, we show in profit and loss account. Debit side, to salaries and wages. Adjustment is there. Therefore, amount in inner column, 2,400. Adjustment number 2. Prepaid salaries and wages 400. Prepaid means what? Next year's expenditure now only we paid. Next year expenditure we should show in next year profit and loss account, not in present account. No. We are preparing this account to know present year profit or loss. In that case, current year expenses, current year incomes only we should show in this account. If any next year amounts are included, we should subtract them. Therefore, prepaid salaries and wages we have to subtract. Minus prepaid 400 rupees. Net amount in outer column 2,000. Machinery. So on machinery, depreciation adjustment is given. Fourth bit, depreciation on machinery 10%. So machinery, fixed asset, when we use any fixed asset continuously, its value decreases. That is an expenditure. It is an indirect expenditure. Therefore, profit and loss account debit side we should show. To depreciation on machinery. On machinery value, we have to calculate. In trial balance, machinery value is given as 6,000. On that, depreciation rate 10%. 10 by 100. Numerator 0, denominator 0. 600 is left in outer column. Next, discount. Debit side discount is given. Debit side of trial balance. Rules you should know. Debit side, he gives assets, expenses, losses, drawings. Credit side, opposite. Means liabilities, incomes, gains, provisions, funds, reserves. Debit side discount is given. Then the meaning is it is a loss. Means discount allowed. So indirect loss, profit and loss account debit side. To discount. You need not to write discount allowed word because he is giving only discount word. No? 700 rupees. Copyright, carriage on sale. Carriage means transport. If only carriage is given, or carriage on purchase is given, or carriage inward is given, that is direct expenditure, trading account debit side. Because in all these three words, meaning is from supplier's place to our factory we are bringing and we paid the transport expenditure. That is direct expenditure, because after bringing only we manufacture the goods. Carriage on sale or carriage outward means what? We manufacture the product. We are giving free home delivery facility to our customer. So from our showroom to customer's house we are transporting. This is after manufacturing expenditure. Therefore indirect expenditure. P&L account debit side. To carriage on sale, 400 rupees. Clearing charges, bills receivable, opening stock, printing and stationery. So we print bill books or any documents, brochures, etc. Stationery, when we are running office, we need stationery items to do office work. So these two are also not related with the manufacturing process. They come under administration expenditure, indirect expenditure, debit side of profit and loss account. To printing and stationery, 2500, no adjustment, therefore amount in outer column. Coal, gas, debtors. On debtors also there is one adjustment. Adjustment number 3, create a 6% provision for bad and doubtful debts. So debtor means they are liable to us, asset. Debit side, bad debts are not given. Credit side, provision for bad debt is not given. In adjustment, bad debt is not given. Only provision for bad and doubtful debt is given. Bad debt means what? From debtors money will not come. Confirm loss. Provision for bad debt means what? Money may come, may not come. Means expected loss. As per conservatism convention, expected loss we have to show in the books. So this is expected loss. Therefore debit side of profit and loss account we should show. 2, he is giving provision for bad and doubtful debt word, that only we will use. 2, provision for bad and doubtful debts. On debtors we have to calculate. In trial balance debit side, debtor value is 10,000 rupees. On that 6%, 6 by 100, 2 zeros, 2 zeros. If you cancel 100 into 6, 600 rupees in outer column. Drawings, furniture, office expenses. So office related expenditure is administration expenditure, indirect expenditure, profit and loss account debit side. 2 office expenses, no adjustment, therefore amount in outer column 1500 rupees. Internet charges, administration expenditure, debit side. 2 internet charges, 500 rupees. Debit side completed. Come to credit side. Sales, interest. Credit side interest is given. Means interest received. Because trial balance rules we should keep in mind. Credit side income he gives, debit side expenses. Debit side if interest is given, meaning is interest paid. Debit side of P&L account we should show. Credit side interest, interest received, profit and loss account credit side. By interest, 4,000 rupees. Discount, credit side discount means profit, discount received. By discount, you need not write received word because he is not giving. 3,500. Overdraft, capital, creditors. So trial balance amounts completed. Come to adjustments. Closing stock, not here. Prepaid salaries and wages, completed. Create provision 6% on debtors, completed. Depreciation on machinery, completed. Interest on capital. See, capital means what? This is our firm. Owner. Owner is bringing money into the business to start the business. This is known as capital. So as per business entity concept, firm is separate, owner is separate. When owner is bringing money into the business, we should assume that firm is taking loan from owner. So capital is liability. And who should pay interest to whom? Firm should pay interest to the owner, because we are taking loan from owner. Therefore, to the firm, this interest is an expenditure. So profit and loss account debit side. You may get a small doubt. That is, legally, owner, firm, both are same only. No? In accounts, we are assuming that owner is separate, firm is separate, we are taking loan from him. But practically, if you see, legally, owner, firm, both are same only. Because this is sole proprietorship business. Owner's money means firm's money. So, for him, he is bringing money, then why we should pay interest to him? This is a doubt. See, there is one concept known as opportunity cost. What is that? For example, capital amount is 10 lakh rupees. Instead of investing in this business, if owner deposit this money in bank, then he gets some interest. No? So when he is investing that 10 lakh rupees in the business, owner is losing that interest, bank interest. So in this business, how much profit we should earn? More than that bank interest, he should earn the profit. Here, interest on capital 6% is given. Then the meaning is, if this 10 lakh is invested somewhere, if this 10 lakh is deposited in bank, minimum 6% interest comes. Instead of investing there, when 10 lakh is invested here in this business, then the profit should be more than 6%. Owner should have that clarity. Suppose here on this capital only 2% profit is coming. Then instead of investing in outside, we are investing in our business and we are able to earn only 2%. If you invest that 10 lakh in outside, 6% interest is coming. Then the meaning is, it is advisable to shut down everything. Instead of doing the business, simply put that money in bank. At least 6% interest will come. So owner should get a clarity like this. I am investing 10 lakh rupee in business. If this amount is invested somewhere, then 6% interest comes. That is 6% also as an opportunity cost, he shows in profit and loss account. After showing that 6% amount as a cost, if profit is coming, then the meaning is, it is better to continue with this business. Otherwise, we have to shut down this business. That is why interest on capital will be calculated in sole proprietorship business. So interest on capital debit side now. 2. Interest on capital. Percentage is given. On capital amount we have to calculate. Capital is 50,000 rupees. On that, rate of interest 6%. 3,000 rupees. Next, sixth point. MD's commission. MD means managing director. Nothing but sole proprietor. MD's commission on net profit is 10% before charging such a commission. Here MD's commission. What is this concept? See, suppose you take one public limited company, Reliance, Tata. Who is MD? Founder of the company, promoter. For MD services, he takes some commission from the company. Okay? But this is sole proprietorship business. No? In sole proprietorship business, management and ownership both remains in same person's hands. Owner is Yadadri Traders. Okay, maybe Yadadri, owner's name. So he is the MD and he is the owner of the firm. He is only managing the business. Then why we should give commission to him? When profit comes, total profit belongs to Yadadri only, no? Because this is sole proprietorship business. In case of company, when profit comes, company should pay that money to shareholders in the form of dividend. That is why MD's commission concept is okay. But in sole proprietorship, why this MD's commission concept is given? This is our sole proprietorship business. Owner's name is Yadadri. In business, when profit comes, total profit belongs to Yadadri only. Then why separately commission he should take? Because sometimes owner feels that as a managing director, I should earn some commission also for my services. Say profit is 10,000 rupees. Owner's commission is say 2,000 in this profit. Then 2,000 we will pay in the form of commission. Then remaining profit 8,000 rupees. That amount owner may invest to develop the business further. So for his efforts, his commission first he is taking. Then remaining profit he wants to invest in the business. If this commission is not charged like this, then profit 10,000 no? Total profit he is investing in the business again. Then for his efforts, what is the remuneration to him? So he wants to take his remuneration first. Then remaining profit he wants to use for the development of business. In that case, he may include this option, that is managing director's commission. While calculating MD's commission, sentence you have to carefully observe. See the adjustment again. MD's commission on net profit is 10% before charging such commission. Sometimes he gives after charging such commission. So in further problems, I will explain that point also. First, before charging commission is given here now. Then how to calculate? First, don't show MD's commission here. Like previous problems, find out the net profit first. Credit total minus debit total. Credit amounts total 17,700. Debit amounts total 11,800. Income is more than the expenditure. Therefore, this is profit. So this profit is before charging MD's commission now, because MD's commission not yet written here. On this profit, 10% commission we have to pay to MD. That is given in the question now. So this net profit before charging MD's commission, on that 10 by 100 is equal 590 rupees. This is MD's commission. So firm should pay to MD. To the firm, this is an expenditure. Therefore, profit and loss account debit side we should show. To MD's commission. Show the calculation here. On 5,900 rupees, 10%. In outer column, 590 rupees. Now finally, again calculate net profit by considering even this MD's commission also. Credit total already we have calculated. Now debit total including 590 is 12,390. Credit side income, debit side expenditure. Income is more than the expenditure. Therefore final amount is profit. This profit, debit side total is less now. So debit side we should show 5,310 rupees. For this, you have to write 2 net profit. Finally, 2 set totals. Credit total is more 17,700. Credit side also same 17,700. So this is profit and loss account. Take a screenshot of this. Now balance sheet. Heading: Balance sheet of Yadadri Traders as on 31st December 2018. Liabilities amount, assets amount. First, trial balance debit side. Means here, asset side. Cash, asset no? 4,200 rupees. Purchases, carriage, factory rent, salaries and wages. Machinery is an asset. Adjustment is there, therefore amount in inner column 6,000 rupees. And what is the adjustment? Depreciation. Adjustment number 4. Depreciation on machinery 10%. In profit and loss account we have calculated 600k. That amount we have to subtract here minus depreciation. Net amount in outer column 5,400. Discount. Copyrights. Copyright means what? We are one author. We wrote one book. So one publisher has purchased the rights of printing this book by paying copyrights. So as a publisher, we have the right to print this book. Others should not copy this. That right is known as copyright. So as a patent rights, copyrights are also one intangible asset. Asset side, 10,000 rupees. Carriage on sale, clearing charges, bills receivable, asset, 12,000 rupees. Opening stock, printing and stationery, coal and gas, debtor, asset. Adjustment is a provision. Therefore, debtor's amount in inner column, 10,000 rupees. Adjustment. Create 6% provision for bad and doubtful debt. So in profit and loss account, we have calculated 600 came no. That amount here we have to subtract minus provision for bad and doubtful debts. ₹600, 9,400. Task completed. Drawings, furniture, asset, 15,000 rupees. Office expenses, internet charges. Debit side completed. Come to credit side, means here liability side. Sales, interest, discount, overdraft, bank overdraft. From bank we took loan. Liability 2,500. Overdraft. Next, capital liability. At the end we will show that. Creditors 3,000. Liability. Creditors. Trial balance amounts completed. Come to adjustments. Adjustment amounts 2 times we should take now. Closing stock 1 time. Trading account credit side we wrote. Second time asset side. At the end we will show that. Prepaid salaries and wages 1 time in profit and loss account. From salaries we have subtracted. Second time in balance sheet. Prepaid salaries and wages. Next year amount now only we paid. Without receiving the benefit, we paid money. In future, we have to receive the benefit now. Benefit should come. Therefore, this is an asset. Asset side. Prepaid salaries and wages, 400 rupees. Create provision. Completed now. Fourth point, depreciation on machinery over. Interest on capital. To capital, we will adjust that. Sixth point, MD's commission on net profit is 10% before charging such commission. Adjustment amount 2 times we should write. 1 time profit and loss account debit side we wrote this amount. Second time in balance sheet liability side we have to write. Because firm has to pay this commission to MD. So we have to pay means liability MD's commission. In profit and loss account we have calculated 590 rupees came. Show that amount here. Then finally, asset side, closing stock, 6,500. Liability side, capital adjustment. Capital in inner column, 50,000 rupees. In profit and loss account, net profit came. That amount we should add. Interest on capital is given in the adjustment. That amount also we should add. And drawings amount we should subtract. Drawings are given in the trial balance. First, profit and then interest we will add plus net profit. In profit and loss account, net profit 5,310 rupees came plus interest on capital. In profit and loss account we have calculated 3,000 rupees came. Total here only because drawings are then 58,310 rupees minus drawings. Drawings amount 1,500 rupees. Remaining in outer column 56,810 rupees. Everything is completed. Finally, 2 side totals. Asset side total 62,900. Liability side also same total came. So this is all about 11th problem from final accounts topic. Hope this video is helpful to you. Thank you.